Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend Dion from Dion Talk. How you doing, buddy?
Howdy, I'm doing great. Thank you for reaching out on another random Saturday.
There you go. There you go. Hey, thank you for watching. So I forwarded you a video from Patrick Bet David at Valuetainment. I believe the thumbnail says fear porn. I asked you to watch it, which you had watched before. You have watched again. I think there's several messages in that video that I agree with 100%, and we will talk about them. But there is one thing that is at least open for debate. And to me, that is 10% interest rates. So in that video, Patrick talks about his very early call. Good for him that he thinks rates will go to 10%. He made that call when they were 5, and now we are at 7.5. Good for him, right? The trend is in his favor, but he's still adamant that rates are going to 10%. So I think we should start there. As you know, two individuals who are in the game of real estate, been doing this a while. We've seen rates explode. Patrick's been right trend wise. What do you think? Do you think we might see double digits?
I My take is I wish we had them already.
Yeah, exactly. Come on, hurry up. Yeah.
See, so if the idea is to fix inflation with higher rates, and inflation is it impacts everybody. So people with assets see their net worth grow, but the cost of food, the cost of fuel, the cost of your actually daily living is more impactful for people who don't make a lot of money and who don't have the cash flowing assets and who aren't seeing record appreciation because of inflation. So to help the average person, going up the amount that we have hasn't really fixed inflation. We're still in the eights, right? So I wish that we did already, and I'm hoping, I don't want to get caught living on hopium, but I'm hoping that they make that change because it isn't working where it's at. My opinion was, and I've said this for over a year, I'm even losing a couple bucks on a bet over it, was inflation isn't going to be fixed by higher rates, right? Unless they went to like 1980 version of 20%, right? And we're not going to do that. I don't see us doing that. We're not, some of us aren't even sure we'd get to the 10% that Patrick is saying we're going to see. So I thought the Fed would raise rates, inflation would continue, and then the Fed would pivot, which would be a nightmare for investors. So many people are saying, I wish rates would come back down so I could buy a property. Imagine what would happen to prices. Because so the mistake a lot of people think is they say, if interest rates go up 1%, prices come down 10%. And the correct version of that is, if interest rates go up 1%, buying power can come down 10%. Right. But demand can increase.
And yeah.
So higher interest rates don't mean prices come down. But on the flip side of that, lower interest rates mean prices go up. It doesn't mean you can all of a sudden afford it because your payment becomes less. Everybody else that was waiting for that interest rate to come down pounces, and prices will skyrocket again. So as much as people hope for rates to come down, like I expect them to when the Fed does eventually pivot, it's going to kill prices.
Yeah. Yeah, so when I look at this, again, giving full credit to Patrick for calling this early, I love people who take a shot and call things early. That's obviously what I enjoy doing. When you're right, it feels great. And when you're wrong, you're like, oh, I'm wrong. I took a shot early. Again, applaud Patrick for making that call early. And also, if you saw the video, which I know you have, I found it really interesting that he pulled up a version of the 1952 or the 52-year spreadsheet, right? He actually quoted numbers that are on my spreadsheet, right? Which people have.
And he did say 50 years. Yeah.
Yeah. So it was really cool to see him do that. And again, I pulled up the spreadsheet, right? There were 12 years that the mortgage rate wasn't single digit, right? It was 10% or above. What is interesting, though, when you pull up the 52-year spreadsheet, actually, you know what? I have it. I didn't know I was going to go here, but let me share it. Because so let me bring it up before I just talk too much. So can you see it now?
Yes.
So again, Patrick talked about interest rates. And again, you can go back and watch the video, talk about what interest rate was, 10.3%, 10 this. And these are all what Patrick was talking about. I look at this and go, okay, what happened to prices? Well, look above here, right? Those are nominal, not real, right? Again, if you're watching George Gammon, this is nominal, not real, right? Because they're not adjusted for inflation. So again, no negative numbers on pricing, national median home price. But where I was looking at was CPI, inflation, which is down here. row 20. Look at where inflation was for those years where interest rates were up over 10%, right? It got down under 2 once in 1986, but what was the average? The average was 6%. You can see that down here at the bottom of the screen. For what is that? 12 years, inflation was 6%. We could have that again. We could have that absolutely again. And where was unemployment? Let's take a look at that over 12 years. So unemployment averaged 7%. What are we today? 3.5%. So again, we could see higher rates. He's right. But these other things would come along with it. CPI would have to be high. Unemployment would go up. It's a very odd world. And I did like that Patrick talked about the 70s. It was interesting that he didn't talk about home appreciation, because obviously he's calling a housing crash in his area, but they not, at least nominally speaking, they didn't crash. What did they do adjusted for inflation? Let's take a look. I think they're down adjusted for, oh, maybe not. I don't know. Let's see. So this is adjusted for inflation. Oh, they're up 1%, 1.2% adjusted for inflation. So, yeah. What do you think?
So when rates come down, they generally do it over years, not a massive pivot. Like we've seen them double in the last 6 months. We're probably not going to see them 50% in the next 6 months. Mm-hmm. And I want to quote a YouTube channel I actually just recently discovered, but he's been around a while, The Out of State Investor. And a question came up from one of his viewers of, is it a good time to buy a rental? And my answer would be something like, well, it depends on your situation. Do you have the reserves? Can you handle a mistake? What type of rental you're looking at? Do you have economic drive? Like I have this long list, and he narrows it down to, it's never a good time or a bad time to buy a rental, but right now it's a hard time.
Oh, it's a hard time.
And I thought that was genius. So I want to make sure he gets credit for that, but it makes sense. Yeah. The confused mind says no. And right now, no one knows. Rates up, down, prices up, down, recession. People were calling for a recession in 2020. They were saying there's no way we can't have a recession. And then look at the last 2 years. So and this is from sales. You want to make your marketing and your sales pitch as simple as easy, because the confused mind says no, it's a marketing ploy. Mm-hmm. That works in real estate too. Yeah. The more uncertain we are, the less we're going to take action, because making money takes action. Keeping money takes habits. Like it has to be ingrained in you to do certain things daily. But to grow real wealth, that takes knowledge. Yeah. So the people watching your channel are getting the knowledge. To take the action, they need to be somewhat secure in what's going to happen. So for me, that's not knowing what's going to happen. For me, that's having a plan that will work if prices go up or down, if rates will go up or down, what will work for me. And that's buying cash flowing properties that cash flow based on today's numbers.
Today's numbers. Yes.
Right. Yeah.
Yeah. So when I look at 10%, again, as Patrick kind of alludes to, I'm one of the people he's pointing out saying, I don't see it. I don't think it's possible, but this is how we get there. The Fed has to get the Fed funds rate, which is currently at 3%, probably goes to 3.75 today. They have to get the Fed funds to 7. You get Fed funds to 7, the 10-year treasury is over 8. Then you have mortgage rates over 10. So in order to get to 10% mortgage rates, I just want people to realize where you have to go, right? Could the Fed funds be at 6.5? Sure. I'm thinking 6.5 to 7 Fed funds gets the 10-year treasury, to 8.5, which can get mortgage rates over 10%. So can we get there? I have no idea, but I do know you don't get a 10-year mortgage rate with a 4% Fed funds rate, at least in normal circumstances. So I don't see 10 years, 10% mortgage rates. Like Dion, I would love it, because again, that would cause instant pain that we could get through. A lot of people would be hurt if you had variable rate debt. Commercial properties particularly would be hurt. And then we can kind of move on from there. But yeah. So do you see 10% just out there?
It's hard to call for something when you hope for it. Right?
Yeah.
So I still think rates will drop. I think it's going to be a nightmare for prices, but I'm going to call rates going down. I hope we get to 7. I hope we break the 7 Fed rate.
Oh, okay.
Okay. But
Wow.
I think at some point they're going to realize, okay, we have crushed an industry, which I'm going to bring up more in video 2 today on the what Patrick in this video called out, an actual industry that is being decimated by the current market.
We will get to that right now. Dion, where can people find you?
Right here on YouTube, Dion Talk Financial Freedom, where I do my live streams every Tuesday afternoon, 4 p.m. Pacific.
Today? No, today's Wednesday.
Today's Wednesday, so it was last night.
Yeah, it was last night. Well, very cool. Thanks, buddy.